everybody, Izzy Lazada here with FEP Collaborative and FEP SPV Ventures. I wanted to connect with you guys today to really touch on what's going on in the market climate right now. We're in an election year. You've got a lot of geopolitical risks going on. The market, the public markets that is, did really well, the stock market, in 2023. It continues to do well. There's records being broken. And yet there's all these market indices that are throwing question marks up saying, what's going on? Is there going to be some big bubble that's about to burst? At the end of the day, nobody has a crystal ball, but there are some things that will give you an indication. For example, if there are gray storm clouds in the distance and you hear a rumbling and claps of thunder, you will likely see rain. Can it ultimately turn into blue skies and you didn't get a drop of rain? Of course. But at the end of the day, we look at some of these things that are pointing to the fact there might be a storm that's on the horizon coming towards us. So we're looking at these capital markets saying, where are investors going to put their money now? So in 2023 and even 2022, you saw a big slowdown in private equity, private placements, and micro cap startups and things of that nature. I believe right now we're about to see one of the biggest swings coming out from the public markets into the private markets than we've seen in a really long time. And what I want to introduce you guys to is something called an SPV. We do them here at FEP SPV Ventures. They're very effective. It gives you an opportunity to attract sophisticated monies into your microcap startup. Excuse me. And there's a reason why SPVs are favored for sophisticated investors. And this acronym just simply stands for Special Purpose Vehicle, right? And the way the Special Purpose Vehicle works is you have this outside entity. This is the Special Purpose Vehicle that might have a multiplicity of investors that are in here, okay? And they come in at all different amounts. But in the aggregate, let's say they put in here somewhere around $3 to $5 million in investment capital. So what our firm, FEP Collaborative, does in FEP SPV Ventures is we manage this for you. You hire us on a consultative basis to go out and identify these folks that are looking to put capital into smart ideas from the outside instead of just sitting in cash and getting nominal interest rates. They have a potential upside by putting some capital in here in the aggregate. So why would a sophisticated investor want to do this to begin with? Well, number one, what investors do not like to do, especially sophisticated ones, they don't want to be the only one with the open checkbook. So what that means is if you've ever done a friends and family round before, and many of you have, many of you that are talking to me, you maybe got a few investors to put some capital in, and you thought that 100,000, 300,000, $500,000, $1 million was going to be enough, and then all of a sudden you realize you need more capital. You only had 5 people that you were talking to, and suddenly you're faced with what's called a cash call. And you call on your investors and they say, buddy, I don't know what to tell you. I gave you 50, 100 grand, 25 grand, whatever it is, and I took a flyer on this. You said that $1 million would work and it looked like you got all that capital. What happened? So now what ends up happening is these folks don't have the financial wherewithal to put more money into a company. That's why when it comes to an SPV, first of all, we're going to do a significant amount of due diligence and get a good understanding of your company. I'm not saying that if we identify some things that are red flags to us that it's a stop sign, but I will tell you that if you have a multiplicity of red flags and you're unwilling to fix them, well, we certainly don't want to get egg on our face when we're managing something like this to help you bring your company to the next level with the capital that it needs if we believe that there's going to be a significant shortfall with the business plan that you've put together. Excuse me. So with all that being said, on this side, after the due diligence is done, these folks say, well, FEP SPV Ventures, FEP Collaborative, Fidelity Equity Partners, however you know us, these guys are really good at identifying great companies. In fact, we get that all the time. Working with you on the biz dev side, working with you on how to put together your due diligence package, whatever it is that you need to move your company forward or to be showcased in one of our seminars or in one of our virtual conferences, whatever it would look like, many of these folks here are saying, these are great companies. Where did you find them? Well, we're always on the hunt for bright entrepreneurs with great ideas, okay? So that's something that we do really well. I've been in this industry since the 90s, and I think I know what it takes to capitalize the right type of company with these type of dollars, and hopefully you can see some growth out of that and upside. So with that being said, these folks are more confident together saying, hey, I know you guys don't have a small checkbook, so in the event of the possibility that maybe this entity over here, and we should probably draw that circle, we draw an entity over here, which is your company, maybe they have a better feeling or a warm and fuzzy, if you will, that these guys have the financial wherewithal if you need more money to write another check. So maybe individually, everybody's putting 100 grand here, a couple of $100,000. Maybe somebody steps up, really likes the space, really likes the industry. Maybe they want to be on the board. They put in a check here for a 7-figure amount. Maybe it's $500,000. Whatever that number is, they're much more comfortable doing it in the company of other successful people versus your Aunt Betty or your Uncle Fred that just love you and they don't know anything about the industry that you're in. They just were smiling and pinching your cheeks and saying, here's a check for 50 grand. I believe in you. Go ahead and knock them dead, kid, right? But then it doesn't work out, right? Now your Uncle Fred and your Aunt Betty are saying, I'm sorry, honey, I can't give you any more. That's the same amount of money that I give your brother or your sister or anybody else. So there's more of an emotional attachment where this is more logical business. So they're going to look at this and say, well, what happened where they need more money? Does it make sense for us to put more money into this company or not? And if it does, they likely will, right? So here's how this all works. What ends up happening is we aggregate the capital inside of here, and then we put it into your company. One check is written, it's actually a wire transfer, but you get the gist of it. Money goes into your company in exchange for an asset. Okay, so this asset can be a multiplicity of different things. To get things going quickly, I always suggest that you do something simple like a safe agreement. I'm not going to go into all the definitions of all these, but if you know what a safe is, that can be the asset that is being exchanged here. So maybe this company right now is looking for $3 million, and they put out a $3 million safe that this group has purchased. It can also be a convertible note. It could be straight equity. These are primarily the top 3 ways that an SPV will fund a small cap startup company over here. So at the end of the day, the asset goes into this company, and now it has limited liability members that are in here, similar to LPs that are in a venture capital fund. However, an SPV does not function the same way as a venture capital fund does. Any questions on that, you can certainly ping me. And with any of this, if you want my help to get this going for you and working with our team, just go ahead and direct message me, or you can call me up at 970-289-5635. Again, that's 970-289-5635. I'll put my number on the screen here or on the whiteboard. Okay, that's my number directly. So what we look for then is this asset to go into this entity here. You have the exchange here. So let's say they do it with a convertible note, okay? The beautiful thing about this is instead of having all of these people on your cap table in this company over here, you're going to have one entry on your cap table, and that's FEP SPV Ventures. And then it might have a fund number or something like that, because we do this a number of times. So one exchange of assets, okay? PSO, by the way, if $300,000 comes in here first, we don't have to wait till we hit $3 million. We can just send that money over to here and exchange that asset into here and keep that going up to that threshold that we're looking for. But this is how an SPV works, all right? And any more detailed questions on that, we can certainly go into that. And I'm happy to set up some time. You can get on my calendar, direct message me. I can send you a link for that. But I want you guys to really soak this in, because this, I believe, is going to become a very prevalent vehicle going into 2024, because you're going to have a multiplicity of high-level, sophisticated investors from private equity, family offices, individual, what are called super angels. They function very similar to a family office. They're just an individual with a high net worth. They're going to be moving into assets, and they're more attracted into moving into assets in a structure this way. This capital structure is much more beneficial, and it makes more sense to them versus joining on this side over here with a friends and family round or an open safe round, where you know what ends up happening when a VC asks you, hey, can I take a look at your cap table? And they see that there's an individual that they recognize the name, or maybe a firm that they recognize the name. They don't want to divulge that information. So it's a lovely veil of anonymity for them to go inside of here. Of course, you'll know everyone that's inside of that SPV and that's investing in your company. Yet the outside public doesn't necessarily know who they are when they just simply see FEP SPV Ventures on your cap table. So this structure right here works very, very well. Is it a fit for everybody? No. But at the end of the day, even if you're a napkin sketch company, because I get this all the time, well, Izzy, this looks like something that is out of my price range. And let me just address that for a second. Yes, this costs money to do, okay? To work with us on this level, where did I put my pen? Right here. To work with us on this level is somewhere in the neighborhood of around $25,000, okay? And we work with startups all the time, so obviously putting this together and making that number work is obviously something that we can do, because we're specifically catering to startups. So don't get scared with this number. And if you're starting a company, if you think an investor or your friends and family are going to believe that you have belief in your company and you have zero skin in the game, and many of you are probably already answering, well, I already dumped $300,000, $400,000, whatever it is into my company. Well, you're absolutely right. But if it takes more to make your vision come to fruition, well, then it takes more. That's the bottom line. So we don't get any commissions on the money raised. We're not a broker-dealer. We're not a VC fund. We're not a registered investment advisor or anything like that. We get this, and we get to share in the upside with our investors. So obviously, we want to see you work out. So there's a lot that we deliver when we do our SPV consulting. It's not just we take 25 grand and run. That's not how it works. But at the end of the day, when you capitalize your company, if you were able to do that with $3 to $5 million for this, and there's probably some blue sky fees in there of a couple grand, none of that goes to us. But at the end of the day, all in, let's say this number was $25,000, $30,000, and you were capitalized with $3 million to $5 million. I think that's a significant upside on your side. It's tremendous potential upside for the sophisticated investor that can remain in that veil of anonymity, maybe even provide some individual advisory work, some coaching work, maybe be on the board, whatever that looks like. But at the end of the day, this model, in my opinion, works better than you spending tens of thousands of dollars on crowdfunding, attracting maybe less sophisticated investors that are more or less rolling the dice saying, hey, here's $1,000, here's 10 grand, here's $500, whatever it is. All you're doing is stacking up a bunch of emails and people that have invested some money that is meaningful to them and significant, and it's just going to clog your inbox with a bunch of headaches. With something like this, it's one throat to choke. It's one area of management where we take the majority of that over. We handle the investor relations, the capital procurement. We guide you through all these filings. And at the end of the day, what ends up happening is you get capitalized very effectively, succinctly, in a short period of time, less headaches, and much more sophisticated investors. Now, my question to you is, most of you startup founders, if you have built a company, if you've had an exit already, a lot of times you might look for another exit. So let's say this little guy here is doing great, and you've gotten these investors to put $3 to $5 million in this. This company starts taking off. Does it make sense, if you have another overlapping company, to maybe start another SPV The answer to that is yes. And we can show you how to do that, where now you have a seemingly unlimited resource of capital by attracting sophisticated investors. Now, I've walked through all this, and it seems very simple when I walk through it. So does swimming. You watch people that go swimming across the water, and they can do it at length for a significant amount of time, swimming underwater, holding their breath, and everything else. But my big, bold statement to you is, just because this looks easy, I want to tell you that it is not. It's complicated. There's a lot of things that you have to jump through, yet we handle all that. Just like your car, there's a lot of complicated things, but at the end of the day, you have the steering wheel, the gas pedal, the brakes, and you can manage what's under the hood by just hitting the gas and the brakes. We can take care of all that stuff, but I just want you to understand you need to have a few things for this to work. You got to have a killer pitch deck, a killer due diligence package. You got to have an excellent management team. You got to have the things that an investor would look at and say, this makes sense to put money into. Because if you don't, you're just wasting your time. You won't even waste $25,000 because I wouldn't even let you into my program of consulting work with our team for you to get this started and off the ground unless you had all of the things that are necessary for this to work. Well, I'm really looking forward to connecting with you folks. Again, here's my number up on the screen. You can also email me directly, and that's izzy@fidelityequity.com. So you can email me at izzy@fidelityequity.com. You can call me directly. You can even text me on that number. It's my direct line. But what I'm excited to see here is this transfer of assets from what's coming out of the market now. Folks taking some gains from 2023. They've already begun to figure out what their tax ramifications are for their new set of quarterlies and what that's going to look like. And now I think they're going to be doing some tuck and rolls where they're going to take money off the table because they don't want it in this environment. And they're going to say, what's a private, insulated from the market kind of company that I can invest in? And over the next 3 to 5 years, see a 3 to 5x upside, dare I say 10x upside that they can do here over the short term. But guys, I'm excited to work with you. This is an exciting way to raise capital, to get it done. I'm here to help you. We're really looking forward to working with you. Thanks so much, and we'll see you guys on the next one. Take care now.